In today's trading video, we're going to explore a powerful trading strategy using Confluence, where multiple tools are used to find the same signal. This strategy leverages trend, momentum, and trading volume to find low risk and high reward trading setups. So without further ado, Lions, let's just jump right into the charts. Okay, first let's discuss the key indicators we will need for this scalping strategy. We will need two EMA lines, RSI indicator, VSA indicator, and even Heikin Ashi candlesticks. Trust me, this strategy is really good. Now let's examine the Heikin Ashi candlesticks and actually understand how to use them. So blue Heikin Ashi candlesticks without the lower shadow signal strong bullish momentum. And if we take a look, there are no wicks or lower shadows forming. It keeps making new highs every single time before what happens. Look at this. Red candlestick has a upper shadow over here, lower shadow over here. This signals a turnaround point. But by knowing how Heikin Ashi candlesticks work, you could potentially profit a lot of money just by utilizing what candlesticks are showing you. Red Heikin Ashi candlesticks without the upper shadow indicate strong bearish movement. So as you can see, no upper shadow over here, no wick can be spotted. It continues dropping down. This is where we see the upper wick just over here. So you could potentially think about closing your trading position. Let's say if you entered here, you close off just around here because the upper shadow has already formed. And even though it went towards the downside, it did indicate that there's going to be a push exhaustion kind of scenario just over here. So it's something to keep in mind. This is not the strategy, this is the basics, but I want you to learn everything first before you just jump right into the markets, because this strategy can be a little bit confusing. Now let's talk about the RSI indicator, and we will not use the relative strength index. We will actually use the one below it, which is the RSI strategy. Then it will open up a strategy tester for you. You can just spot 64% profitable, but it's not really relevant because we're going to use it in combination with other indicators to gain confluence to get those high probability signals. If you like, if you're searching for a pair, maybe choose a pair that has performed well previously to potentially increase your chances even more for more profitable trading. So this RSI strategy doesn't paint, it notifies you with an arrow where to buy, where to sell. As you can see, if we buy it over here, potentially we could have profited maybe 6 pips. Over here would have been a solid sell trade towards the downside. And this is great to know, and it's a pretty solid strategy on its own, but we need confluence for high probability trading. So we need more indicators, and the next indicators will be the exponential moving averages. Head over to the indicators section on tradingview.com and you will see moving average exponential. Double click on it. So here are the first settings for the exponential moving average: length 8 and style blue, and here is the second line, length 13 and style orange. So of course we will use this for crossover trading. So when the candlesticks cross the moving averages, we start taking a sell trade, and we will do the same thing for the buying scenario. Once we get a solid cross, we start buying. But again, this is not Confluence. We need one more indicator to make this really good. So head over to the indicator section on TradingView one more time and type in volume spread. It will be the first one in the community scripts, volume spread for VSA. Once you have added this powerful indicator on your charts, at the bottom you will see green bars, yellow, and even red, and these bars will show you the volume. And if you combine it just the right way, it brings you high probability setups, I can guarantee it. Okay, now let's talk about the perfect setup ideally you will always be looking for, and if you find it, chances are the trade will do really well. Okay, so what's the first thing we can spot? The RSI indication is telling us to buy. This is a great signal already. RSI is in favor for us. So what else? The Heikin Ashi candlesticks just over here have crossed the two moving averages. This is another great indication for further bullish pressure. The most obvious one, VSA indicator bar, is on the red, showing strong volume building up. And the last indication, don't forget the Heikin Ashi candlesticks. As you can see, every single time it closed, there's no lower shadow. This is a great indication for further bullish pressure and momentum. And then you can safely start opening your long positions just over here because you have a strong confluence, right? So look at this. This would have been a beautiful trade, just touching the top of the Heikin Ashi wick And look at this, it would have been 21 pips profit. Now you need to understand where to actually close off your position. So there are two methods that I will discuss. There's the most obvious one. The Heikin Ashi candlestick starts showing the lower wick just over here. As you can see, it's quite small, but it started to show the lower wick, which indicates there could be a pullback, and there was after 3 candlesticks went towards the downside. So you could have potentially just close your position just around here once you actually spot the candlestick closure. Or you can be a little bit more aggressive in the markets, and it's probably my favorite way. I love utilizing the moving averages. I always trade with them. So look what's happening. It never broke the 2 moving averages, right? We did have a pullback just over here because the Heikin Ashi candlestick lower wick was telling me it's gonna go down, and it did drop down. But what happened? It was respected just over here by the 13 exponential moving average, and you could have potentially continued trading this trade, right? Look at this. So potentially banked yourself 30 pips, and then if you don't close yet, then you close when the candlesticks cross the 2 moving averages. So this one over here, so let's just spot, let's see how much money we would have made. So 21.8 pips. So potentially if you missed this opportunity over here, you could have potentially extended it to 30 pips. If not, and you see the trend is changing direction, this would have been your closure. Still 21 to 22 pips profit. Okay, now that we discussed the perfect setup, let's have a look at other alternative setups that you could potentially utilize without it being perfect. Okay, so what do we have over here? A clear breakout, right? If we just add our resistance line and support line, it's clear as day, and we could potentially utilize this strategy and bank ourselves a lot of profit by taking this trade on a breakout. And even though we don't have an RSI line just over here telling us we should sell, we do have a different type of confluence, right? We have a breakout of support into a new low. This is super important. So we could potentially short this trading position just off here. Look at this. We are covering with our stop loss the 2 exponential moving averages. The VSA indicator is also in the red, showing strong bearish momentum. And what happens is starts going down. And as you can see, we could have potentially banked ourselves around 30 pips profit. This is the max pip gain. Of course, if you're safe, you could have followed this strategy and banked yourself around, I don't know, maybe 14 pips, because we do see the upper shadow just over here. When the market is going down, we are looking for the upper wick, or we could utilize the more aggressive technique where we break the 2 moving averages. So a break just over here means a closure. This would have been, around 19.8 pips, so 20 pips profit. Pretty damn good. Your max pip gain is 30, so really depends how much you're willing to risk. But this could have been a nice 2-to-1 to 2.5 risk to reward ratio just by utilizing the breakout. So even though you didn't have the RSI indicator telling you to sell in this case, it didn't matter because you had price action confluence in this case. You had a strong breakout of support which made the new low, which indicated the market to dip down, and then you just follow the Heikin Ashi candlesticks with the VSA, and then you're banking yourself some profit. Also, quick little side note, make sure to utilize trends as well. I forgot to mention that, but as you can see, it was a nice consolidation, bounced over here, strong area of resistance, strong area of trend line. It's what we like to call a descending triangle, and then it dipped down. This is price action. This is not really relevant with this video, but you should probably know this to increase your chances for successful trading. So here's another example of not a perfect trade, but look at this. If we just entered over here, we crossed the 2 moving averages, nice little candlestick, no lower shadow over here, moving towards the upside. So look at this, we could have banked ourselves the maximum gain of 30 pips once again. The VSA indicator is also in the red and keeps being in the red. We show strong bullish momentum. And once we start seeing the Heikin Ashi candlesticks change, as you can see, it has the lower shadow over here. We can start closing our trades off. So potentially you could have closed around 17 pips profit. If you use the aggressive method, sometimes it can be a little bit lower. Look at this, 10 pips only if we closed it somewhere around here. So it really depends on your style, what type of trader you are. This comes with skill and practice in Forex. It doesn't just happen over a day. So don't get discouraged if you can't get it right the first time round. Something I want to mention is use multiple time frames always. It's very important. You will never be a profitable trader if you don't utilize multiple time frames. So using a little bit of logic, this is the 15-minute time frame. Let's say we draw a trend for USD Japanese yen. We can see a previous area of resistance just over here. How's the market reacting? This is what you need to think of, right? Nice push, exhaustion, push, exhaustion, push, right? Potentially, because we have a strong area of trend just over here. What else is happening? On the 15-minute time frame, we have an RSI signal telling us to buy. Our volume indicator is telling us, oh, it's yellow buy. It should be a good push towards the upside. However, if we have a look, we haven't crossed the 2 EMA lines, right? And they can react as a form of resistance as well, and we don't want it to just dip down. So what do? We can either wait for a solid break, maybe somewhere over here, or you can go to the lower time frames and see what's happening there. So this is the 5-minute chart. Looks very similar to the 15-minute one, and look at this. We know that RSI is telling us to buy. It doesn't matter, you don't have to enter on the exact candlestick. As long as it's telling us to buy over here and there was a signal, it doesn't matter whether you enter a few candlesticks later. So now let's take a look at our VSA indicator. We did have a red bar just over here, but what's happening? Look, it's an indecisive candlestick, right? There's the lower shadow for the Heikin Ashi candlesticks just over here. We don't want that. We need a strong, nice candlestick. So where's a strong, nice candlestick? I would say just over here, because it previously passed this area of sensitivity, right? A lot of wicks bounced off this area, so it's a good place to enter. This becomes a breakout trade. It's still respecting the 2 exponential moving averages. What's happening with the volume indicator is also telling us to start buying because it's in the yellow. This is where you want to buy. Whether it's yellow or red, this is where you want to use the volume indicator. And the RSI strategy, even though it was a late entry, it doesn't matter. The RSI moves in swings, right? So it's predicting there's going to be a swing, and this is what's currently happening. So if we entered our position just over here, we could have banked ourselves a nice 35 pips profit. Look at this. This would have been a beautiful trade, and this is where our previous area of resistance was. Even if you have a look at the Heikin Ashi candlestick, look where the lower wick formed, exactly where the resistance line is, right? It started forming, telling you maybe it could be bouncing back and kind of shooting back down. So maybe you should close off. That's what the Heikin Ashi candlestick is telling you. So if you're a safe trader, you could have potentially closed it just right here and banked yourself, 35 pips profit. Stop loss would have been much lower, something like that. So 2.3 risk reward, I would say, seems pretty damn reasonable. But you could have potentially banked yourself a lot more if you had that breakout. Once you have that nice little breakout and you see momentum increasing, especially since the volume indicator is still showing, confident yellow bars, and we know that previous area of resistance has now been broken, likely there's going to be a strong push towards the upside once again. So we do have it, and just over here, maybe around 69 pips, we can close it off if you're the safe trader. Or you can do the aggressive approach where you don't close the trade until you actually cross the 2 exponential moving averages, which is my favorite way, by the way. This is the way you can ride the trend and maximize your pip gains this way. So this is where I would have closed probably 136 pips. Pretty damn awesome if you ask me. And I recommend you watch this video next because it's pretty damn good. And this was Elders, and take care, Lions. Peace.